The first quarter is in the books, so let's find out what happened on this edition of the Video Market Update. The first quarter will go down as the best first quarter for stocks since 2019. The S&P 500, which is a broad stock market index, was up over 10%. The tech-heavy NASDAQ was up 9%, and the Dow Jones Industrial Average was up about 5%. That's pretty good for 3 months. In fact, this being the best quarter since 2019, when 2019 actually ended as a good year for stocks. So we've started off well. Now let's hear from the Chief Investment Officer of AE Wealth Management, Tom Siamatis, on some of the conditions and some of the reasons for what happened in the first quarter.
Let's go back to the market's expectations at the start of the year. It was true that the Fed had paused raising rates in the last few meetings as it assessed the impact of a 5.25% Fed funds rate on the economy. The Fed raised rates for the last time back in July, but at no time did they say they were stopping or signaling imminent cuts. So it seemed pretty remarkable that markets decided that A, the Fed was done, although they dropped many hints, and B, that we would eventually see 6 rate cuts, putting the Fed funds rate below 4% by the end of the year. Employment was still going strong at the beginning of the quarter, so one of the Fed's measures to determine whether or not to cut rates was not trending favorably. The Fed will feel better about dropping rates if we see unemployment in the 4 to 4.5% range. We're not there yet, but we haven't been above 4% since November of 2021. The other metric of inflation, or price stability, has come down from its 40-year high of 9.1% in June of 2022, but it has been stuck between 3 and 3.7% since June 2023. So the stated 2% goal hasn't been met. That was the backdrop going into the quarter. The Fed was done and going to cut rates, and consumers were still spending. Markets soared to new records, with tech companies leading the way. Then Fed Chair Jerome Powell doused any misconceptions about imminent rate cuts and said it would be far more likely we could see another 3 rate cuts rather than 6, starting possibly in June. Markets didn't like this news, and the magical mood was broken momentarily. But as they shook off the realization that 6 cuts were off the table, they chose to focus on the stronger than expected earnings and the notion that rates were far more likely to decline than go up. They also liked that the economy was hanging in there and not headed into recession. Each piece of economic data was examined for what kind of impact it would have on the Fed's next move. Markets liked what they saw, and the data was encouraging enough to keep them moving upward throughout the quarter.
So Q1's in the books, but there's still a few more quarters to go to see how this year will turn out. Certainly we're looking for the Fed. Certainly we're looking at unemployment. And certainly we're looking to see how consumers spend and how company earnings result over the next few months. But certainly we're always glad when we can start the year off well. If you have any questions on anything you heard in this video or anything you're hearing in the news, let me know. If not, as always, I hope you make it a great week.